know what you're all thinking. I look exactly like Praz in Jakuma. I have to take the place for him because unfortunately Praz got sick on the flight back from the UK where he's been. So this one, this is a passion area of mine. Who was at our, you probably don't remember, but I'll just ask, who was at our venture and capital event in 2023? All right. At that event, I gave a super passionate talk about basically the things I was excited about, and one of those was actually the Bitcoin halving. And we had a look at my team. We had a look with my team, and at that time, the price of Bitcoin was around $29,000 to $30,000 US. Right. So I hope people from that event took those signals and made some investments from it. Now, whilst everyone's sort of coming back in, it's obviously going to be a bit noisy. Once again, I'm just making sure my phone doesn't turn off. All right, so just what I'll do to start off with, can I just get the panelists to give a bit of an introduction to yourselves and your firms, and then we'll take it from there.
Hi everyone, I'm Phoebe. I'm a founder of the Art of Capital. So we founded the firm 5 years ago, and before that, I'm in venture capital. We primarily invest into technology, biotech, and some mining companies.
Hi, my name is Effie Dimitropoulos. I'm CEO and co-founder of AUDD Stablecoin, and we've been in market live and operational for the past 3 years. My background has been in alternative payment method operations, not only locally in Australia, but also around the world, dealing with a number of different jurisdictions. And so for me, this was a natural progression from alternative payments such as prepaid cards, QR codes, tokenized payments into a stablecoin. So that's me.
Awesome. Thanks, Effie. I'm Kate Cooper. I'm CEO of OKX here in Australia. And for those of you not familiar, OKX is on any given day probably the second or third largest exchange in the world. We have 60 million users globally, but a relatively new kid on the block in Australia, launching about 12 months ago. Prior to that, I was 10 years in Australian banking, TradFi for my sins, including leading digital assets at National Australia Bank, where we built a stablecoin but failed to launch it because the regulatory environment was not conducive at the time, and hopefully that's going to change. Looking forward to the panel.
Hi, my name's Andrew Palmer. It's good to be the diversity factor on any panel. It's almost a first for me. I'm the portfolio manager for MHC Digital Asset Fund, a diversified crypto fund. With a subsidiary of Mark Carnegie's venture capital fund. Been going for about 5 years. And my background is in traditional finance as well. So was with JP Morgan running some of their markets businesses out in New York and London for an extended period before coming to Australia.
Perfect. So I'll open up with just a broad question for all of you. Anyone can jump in and answer. So from your perspective, how are the global macro trends from whether it be inflation to all the geopolitical risks shaping the appetite for digital assets and stable coins?
Go, Effie.
I might take a starting stab at it. And probably, maybe I just want to get a quick show of hands. Does everyone know what a stablecoin is as opposed to cryptocurrency? Okay, not all of you. So I'll just quickly do the absolute obvious, which is basically it's a stable coin, meaning it's usually backed one-to-one with the sovereign currency which it represents. In this case, I'm representing an Australian dollar stable coin, which is backed one-to-one with Australian dollars held in reserves. And back to the question about macro trends and the environment, stable coins in a global perspective, in particular US dollar stablecoin US dollar stable coins, represented in the past year alone almost $30 trillion of volume of transactions moving on stable coins. That is more than MasterCard and Visa transactions combined, or more than PayPal in itself. So from a macro trend, we are looking at traditional firms, traditional payment firms, traditional finance, shifting into that digital asset space in in my particular expertise, stablecoins are rails that are making that happen and are helping to...
And incredibly profitable companies. If you look at Tether, when they released their profit per employee, that was ridiculous.
Yeah, totally insane. And I think taking kind of the lead from stablecoin as a macro trend, and everyone said last year was the year of stablecoin. I suggest this year is the real year of stablecoin. But also we're seeing obviously we're seeing a shift in the regulatory environment. Everyone will have tracked the evolution of the regulatory environment in the US, which is really setting a benchmark and actually now setting the pace for the digital assets, kind of race, if you like. And one of the things that we've been doing as OKX is we've been looking at the economic potential of the digital asset space for Australia specifically. And we have been working with the Digital Finance CRC and the Digital Economy Council of Australia and have been able to quantify 2 areas so far, although the full report will come out in November, that says that digital assets, tokenisation of real-world assets, digital finance more broadly, could deliver up to 19 billion in productivity gains per annum for Australia. That's 1% of the GDP. But we're currently on track to deliver just 1.8 billion. And the 2 big challenges there are fit-for-purpose clear regulation, as well as the infrastructure rails that are required. And so for me, when we talk about macro trends, I'm concerned and I want Australia to be playing a role in that global momentum that we're seeing, not just in the US and the UAE and Singapore, near neighbours as well. And so that's one of the things that I'm very passionate about.
As an investor in the space, I'm concerned about digital asset valuations increasing. So I'm not that worried about what's happening in Australia, I hate to say it, because it's a global market. Digital assets are a global market. They're non-domiciled. So what's happening geopolitically offshore is far more important to the digital asset market than onshore. And Trump, love him or hate him, he's brought a lot of uncertainty into all markets, including digital asset markets, though he's been very favourable and to the digital asset market. 2 other things that I follow very closely as an investor is global M2, the money supply globally. Bitcoin tends to follow the global money supply with about a 90-day delay, and the correlation there is ridiculous. Interest rates globally coming down, very favourable to digital assets, and also the US dollar coming down, very favourable to risk assets.
Geez, if this panel keeps going, I won't need to do a keynote tomorrow. So for you, Effie, in sort of periods of crypto market volatility, capital often seeks some sort of stability. So how are institutional investors using AUDD and other sort of stable coins as, I suppose, safe harbour?
Exactly, picking up on your point about devaluation of markets, what investors are doing if they already have crypto-based portfolios or digital asset-based portfolios is they're basically saying, okay, well, look, this is a volatile market in the BTC or ETH arena, or even the US dollar. And so what they do is hedge by saying, okay, well, I'm going to stay in the digital economy but move to an asset that's stable. So in comes the stablecoin. And so now they've de-risked their position and not have to let the bottom fall out of it while they're sitting in digital assets. They can still sit in a digital asset, but it can be in a UDD or an equivalent stablecoin.
Part of that motivation, because if they do, let's say, for example, they build up a sizable portfolio of digital assets, selling that and then getting back in is actually quite difficult.
Yeah, picked up on it correctly, yep. So instead of having to go through all the steps, whether it be because you have to make a SWIFT transaction and do it cross-border, or you have to get out in the traditional banking system, through our 9 to 5 or 9 to 4, 5-day a week system, and then try to get back into it again and deal with all the rigmarole that goes with getting money in and out, and in particular for digital assets, it's actually just a lot easier to stay in a digital asset that is secure and is backed 100% in reserve.
Now, Kate, this audience loves yield. Investors, high net worth, family offices have been, there's been a flight to yield over the last sort of 2 years. Now, obviously, crypto has provided, has created now products where yield can actually be created. Some of it is risky. How do you think about offering yield in a way that aims to be sustainable, responsible, and obviously protect the original capital?
Yeah, listen, I think there's two ways to look at it. Way number one is whatever provider you're using, make sure they are, operating to the highest standards. So, for example, OKX has an Australian financial services license. We're one of only 2 that do in Australia. And that means we have to operate with hugely enhanced risk and compliance protocols. And coming from a TradFi background, that's a relief to me coming into the OKX, because that's not something that keeps me awake at night. I know we've got that baseline there. But then when it comes to earning yield on product, obviously staking is one of the key opportunities. We offer a product called Earn, which we've just literally launched in Australia, and gives you the opportunity to earn yield on your assets even when they're sitting at rest. And certainly myself personally, as a self-managed super fund holder, that was one of the biggest reasons why we aimed to launch a product into that space, because we know those who hold self-managed super funds aren't necessarily always particularly active from a trading perspective. They want to hold the asset and benefit from the uptick long term. And if you can also earn yield at the same time, even better. Having that all happen within a safe, secure environment is absolutely paramount. And that's obviously something we hold very dear.
Brilliant. And for you, Phoebe, you obviously, you spend a lot of time looking at various opportunities actually in this space. So, do you see opportunities to combine crypto-focused yield strategies with traditional alpha-generating asset classes as well, just to improve diversification?
Definitely. So traditional market we raise through equity, like what all we know. So I can see a high interest into raising through DePIN or even RWA, so which is probably very
centralized physical infrastructure and real-world assets, for those that are wondering those acronyms.
Yeah. So I think especially real-world assets has a very high probability for people to finding different kind of yield, or even for companies raise through crypto to give back to their investor as well. For example, in the past, we have seen increased interest in raising through gold. So you are pegging towards gold, or if the gold mines happen to get into downstream process, then you will be able to get a pie out of it as well.
And going over to you, Andrew, just out of curiosity, who owns some form of crypto in the room? Just to give the guys a bit of a, I'm sure it's, anyone owns some form, whether it be Bitcoin, Ethereum, anything. Okay. One of the challenges about this kind of period, obviously everyone's seen it go up a lot over the last 2 years. So now it's sort of coming to the stage where there's things called altcoins, also known as shitcoins, right? That sort of, people get super excited about this phase because you don't want to miss out on the hype, you don't want to miss out on the 100-bagger, etc. So this question is going to be directed to you, Andrew. How do you balance FOMO with actual strategy for making sure you deliver returns for yourself as an investor and for your fund?
Yeah, just looking at the hands that went up, I saw a survey that came out yesterday that said 14% of all Americans own some form of crypto. So,
it was the biggest funder for the US elections was from the crypto ecosystem.
Yeah, absolutely. One thing, it is quite interesting looking for where the best value is in the space. And really, we think of crypto as one market, but I personally think of it as 3. We've got the stablecoin side of things, where as an investor, it's all about maintaining value, not making money. So you can make some yield on it, but it isn't an investment for capital appreciation. Then there's Bitcoin, and then there's everything else. Okay, Bitcoin is not a useful asset. It is digital gold. The only use for gold is really hanging it off your ears or around your neck. Its value is determined by supply and demand. Bitcoin is exactly the same. Its value add is created by more people wanting to own it than wanting to sell it. So at the moment, we have sovereigns, corporates, institutional investors, all FOMOing in and prices appreciating. The fact is, with gold, if price rises, you can dig at more gold mines become viable. With Bitcoin, we know what the supply is going to be. So it's all about supply and demand. With everything else, you have to believe that blockchain technology will transform financial markets in order to think of it as a really good investment. So what is blockchain technology? If you think of the internet as the digital transfer of data, blockchain technology is the digital transfer of value. So we are going through the period now in blockchain technology development that the internet went through around the year 2000. So most companies will fail. But you have to be involved to identify the Amazon, the Google of the world. And those that do will do very, very well. So blockchain technology, through stablecoins and the like, why does it help? Banks, if you want to transfer money from A to B, you go to a bank because you trust them. Okay? Trust is very expensive to build. It takes a long time, it takes a lot of capital, it takes regulatory compliance, and it takes building really robust rails. So once you've built it, you can charge what you want to use it. And banks charge an absolute fortune. What blockchain technology does is replace that trusted counterparty with a computer system. Once that computer system is trusted, and that takes a while, then the supernormal profits that banks are extracting can be shared between the user and the company. So think of shitcoins or everything other than Bitcoin as venture capital investing in blockchain technology.
Makes sense. And that's a perfect setup for a question I was going to ask to Effie, talking about the sort of financial infrastructure. You know, for what, the last 7 years, everyone's been talking about building the sort of financial infrastructure, and obviously stablecoins are a significant part of that. Do you sort of want to expand on sort of what Andrew was just saying then, and just talk about why that financial rails is just so important for the health of the digital asset ecosystem?
And also the financial ecosystem, because I will pick up on your point about that trust factor. So today when you, I'll use a use case example that most of you will be familiar with, and it's a cross-border one where you're making a remittance to someone internationally. And now let's assume that that is a large remittance and it is going to somewhere, not necessarily the US, but maybe it's going to India. And when you make that transaction at your bank, all right, and so let's say it's payment of goods and services. So we're all businesses in here and we want to make payments for goods and services. Now, Effie's going to send it to Kate in India, and Effie says, hey, yes, Kate, look, I've made your payment. Here is my screenshot of the bank receipt that I have moved the funds to your account. It'll be there soon. And you've got to trust that.
In what, like 2 days or 3 days probably?
I reckon about 7, and it's probably going to go through 6 intermediaries because my bank's going to send it to a correspondent bank, and that correspondent bank will send it to yet another one before it even makes it to your account. But in the meantime, Kate, you don't know that I might pull that money back into my bank account. You don't know that, and you've got to wait until your 2, 3, 4 days are up and kind of go, Effie, where is that money? Now let's transfer that onto the blockchain. And I say, Kate, give me your wallet address. And you say, sure. And you give me your wallet address. And I say, look, I'll just send you $10, right? So that we can see that that transaction works and it actually is your wallet address. And I send Kate now in India, $10 on the blockchain. And she confirms on the blockchain which is not the bank's, it's not mine, it's not hers, it is public. And so she confirms that it's there. Now, there's some terminology called immutability. It doesn't change. Once it's there, it's there. Right? So I can't pull that back. I can't do anything. It's there. So now Kate says, great, got it. Send me the rest of the $500,000 you owe me. And I basically send it, and 2 minutes later, it's there. Right? And so that's what we are talking about in terms of gaining efficiencies in the new world order by utilising technologies such as blockchain.
Now, I hope I don't get this wrong, but I was literally told this morning. I haven't verified it myself, but someone mentioned that PayPal come out with a report overnight saying that if stablecoins were used for all their transactions across, it would save them something like 90% of their administration costs in transfers, which is astonishing.
Yeah.
And all markets move towards efficiency.
And that's where the $19 billion in productivity gains for Australia comes from.
Well anchored, Kate.
All of those examples.
And Phoebe, I'll go over to you. Obviously, we've talked about digital assets. We've talked about stable coins. There's been a part of this where a lot of money has been made, and that's been in the venture side. And this is obviously a high-risk area. It's very hard to understand how value is sitting inside of it. You know, one of your investments has been in Animoca. Do you just want to explain, I suppose, your investment thesis behind that and how you've seen them as a company create value out of their sort of ecosystems for digital assets?
So initially, when we invested into Animoca, we were thinking about how do they utilize NFT at that time. They were the first probably companies that decided to create their own NFT on the ASX. So we thought, oh, this is very interesting. How do we actually utilize NFT as a product that you can basically register into games? So I personally play games. And then I realized that sometimes if there is certain equipment or even in terms of my gaming account, I wanted to, I don't use it anymore, but what do I do with it? Can I actually sell it? But I don't want to give out my email address. So that is one way to transfer your ownership. And I find that it's very interesting when it comes to the gaming world. So go back to Animoca, and I think that is what exactly they are doing. I think probably a year or 2 years ago, NFT was very hot. But some people got scammed along the way as well because things were not very compliant back then. But I can definitely see there's a lot of value into that as well. So Animoca has actually become so big that they have their own ecosystem. They also, other than investing into other companies, become more of a digital asset funds. They create their own ecosystem by advising to these companies and how do they internally collaborate with each other as well. So the company has definitely grown a lot, and a lot of funds are into it as well. So they were in $1 million market cap back then, and now they are probably trading around $4 billion, $5 billion last raise.
And Kate, this goes over to you. I was very fortunate enough, just as you started with OKX, I was very fortunate enough to join you guys at the Formula One in Melbourne. And as I was going around having conversations with people, they were pretty much everyone from banking or superannuation or from insurance. And you obviously mentioned about your own sort of traditional finance background. How do you go about sort of that conversation around trust when it comes to digital assets and that building a bridge of between what OKX is doing as far as building that sort of future financial infrastructure and the correlation between how you can create that opportunity between the traditional finance world?
Well, first I'll say I hope, as the Aussies in the room are tracking Oscar's rise to the top, and keep an eye out for if we do get an Aussie winner, what we might do to paint Australia papaya. But back to the question at hand. So trust, even in a trustless system, trust underpins everything, and it's again like why I chose OKX as the exchange that I joined, because I needed somewhere I could stand on or sit on a stage like this and really represent with integrity. But I think what's really interesting is not just the kind of retail and wholesale investment, but also the institutional grade investment opportunities that are emerging. And actually just today, we've announced a partnership with the Australian asset manager JLC, which includes ourselves, OKX, but also Franklin Templeton and Standard Chartered Bank. And I think it's a really good example of bringing the kind of new and the innovative companies and the kind of more traditional companies together to provide a trusted ecosystem. And the announcement is very much specifically around a fourth category alongside stablecoin Bitcoin and shitcoin, which you mentioned earlier, which is tokenization of real-world assets. So these are tokens that represent a fraction of a real-world asset, and in this case, it's Franklin Templeton's money market fund. And so the opportunity here via Jelly C, with the transaction facilitated by OKX and Standard Chartered providing the underlying custody of the transaction, is that investors are able to buy access to that tokenized money market fund. And so what we saw as NAB, we had a prediction that within 5 years we would see 30% of our balance sheet tokenized. And that really is the underlying technology that is at play here. And so over the next few years, and certainly we as OKX very much see ourselves as part of the institutional rails to allow this to happen, is we're going to see increasing tokenization of those real-world assets, which of course for the people in this room represent significant investment opportunities, and it would certainly be, you know, something that I would be keeping close eye on. One of the opportunities with cryptocurrencies is you can build your muscle, build your expertise, such that you understand the ecosystem as the market evolves, which it will evolve very rapidly now.
And one of the other things just to add on to that, Kate, obviously in the last week, I can't remember which act it was. It wasn't the Genius Act around the stablecoins, but it was one of the other acts that got signed, was where now the US pension funds can also invest into digital assets as well. And that just goes back to what you said about supply and demand.
Yeah, no, absolutely. And one of the key targets for us with this partnership with Jelly C is the superannuation funds. Currently, allocations is absolutely minute, which is ironic because in self-managed super funds, we're seeing allocations absolutely skyrocket. So what we're seeing is real appetite from investors who want to have agency in their own investment choices, choosing this as an asset class, but we know that the superannuation funds currently don't provide access. $4 trillion plus of capital there. I think, you know, we're certainly looking at ways to kind of unlock the opportunity for exposure through partnerships like the Jelly C, Franklin Templeton, Standard Chartered partnership.
Brilliant. Now, sort of in our last, let's call it 4 minutes, 1 minute each, I'd love you to talk about what your sort of focus is or what you're excited about and some of the future trends and I suppose the outlook. And coming from the point of view that this is an investment conference, obviously this is not financial advice, it's all that sort of fun disclaimer you want to add to everything on top of it. But what's your outlook, you know, over this next period where it comes to digital assets? We'll start with you, Phoebe.
So I think digital asset has come a long way and is definitely on the rise and getting compliant. So it's one of the parts that I think is very important for us to, instead of having fear or missing out, take your time, do your research on companies that are compliant, and make sure that when you invest into this company, you have commitment as well. So that is probably my take on digital asset.
So in other words, don't back any celebrity meme coins.
Unless you're really early. My take, a very biased take, of course, is that the future for digital asset companies, including stablecoin companies, including crypto exchanges, is that they are the rails of the future. So you will see everybody transitioning from the traditional finance rails, whether they be banking, SWIFT, other payment mechanisms, into digital rails that incorporate infrastructure such as stablecoin rails, and even potentially you'll see the new banks. You know, I've been forecasting this for the last couple of years, but I see the cryptocurrency exchanges, in particular the larger ones that are globally based, the new banks of the future.
Yep. I think that's an interesting forecast that I can neither confirm nor deny. I think what I would say to this room, and let's take Australia in particular, and I take your point that it's a global ecosystem, which is absolutely true, but Australia needs to have the right conditions to participate as part of that ecosystem. And so the signals I'd be looking for if I were in your shoes is the regulation being provided to provide the clarity such that institutional adoption starts to move at scale in Australia in the way that we've seen in other jurisdictions. At the moment, we're anticipating late this year, early next year, but that will definitely be a litmus test and an ignition of adoption from all parties in Australia because of the clarity it provides. And I think then we're on another upward trajectory regardless of what the global trends are.
As an investor, I'm interested in valuations. I do see Bitcoin being significantly higher by the end of this year, somewhere in the 150 to 180 area. I think Ethereum outperforms in the short run. I do see Bitcoin. Are we late? No, we're not. I do see Bitcoin somewhere around $1 million in 5 years, and you can quote me on that one in 5 years' time.
Can, because we're actually recording it.
Yeah,
so
there we go. As far as investing is concerned, if you're only interested in Bitcoin and Ethereum, go to OKX and transact and keep it somewhere stable, or use your brokerage account to buy an ETF. Very straightforward. You don't need an asset manager. You go into altcoins as well, searching for higher yields. Get a professional to look after it, someone who's watching the market 24/7. The information, as venture capital investors, you get information from your companies once a month at best. We get it real time because it's on the blockchain. We know how our companies are performing real time if you know where to look. So make sure that you've got someone who knows where to look to pick your coins and is watching the market 24/7. If you just want to get involved through an exchange or through an ETF.
basically did my job for me. Andrew, I was going to say, if you want to place a lot of money on management, speak to Andrew. If you want to chat, if you want to get access to your either first or more crypto, speak to OKX. If you want to if you've got a whole bunch of crypto that you want to convert into AUDD, speak to Effie. And if you want to chat about real world tokens, have a chat to Phoebe. So, ladies and gentlemen, that concludes our digital asset panel. I'm just going to finish on this. I am obviously going to talk about this in my sort of keynote tomorrow. You mentioned one of the parts about the M2 monies. It is just hard to beat an ecosystem that has basically built itself through collaboration, competition, that has also gone to actually fight to get regulation for their ecosystem, which they're now finally getting written, into law. And this is, it's just so hard to beat an asset that is growing exponentially, where there's all various reports around, is it right now at the equivalent as where the internet was in 2000 or whatever. Either way, it's still super early. Even you go around this room, like we've done events where there's been 80% people that have held some sort of crypto. The reality is, come 10 years' time, the majority of us will have some form of crypto in some way. The other part we didn't talk about was just the genuine global debasement of currencies is also one of those things that really speaks to the opportunity that sits inside of digital assets as well. And when you think about, from a technology perspective, blockchain allows to reduce so much of the admin associated with the funds management related to real world assets that it does. Like if you look at all things innovation, all markets move towards efficiency, right? And obviously things that save time and money. And it really does that at a massive global scale from the start. So, I said, I take my hat off to everyone that's in this ecosystem, because everyone that's built, whether it be digital asset funds, digital asset exchanges, whether they're actually building what you're doing, where they're talking about, you have no idea how hard they have to work on stuff which has nothing to do with building a business, which is more focused around regulatory related stuff, building that relationships, building the rails, etc. We're all just going to take for granted that we can do it in 5 to 10 years' time. It's because of people on here that have been doing it and working so hard in this space. So thank you to everyone for joining the panel. I hope everyone got value from it. And back over to you, Jade.